Kadhim.
Cool. Hello. So, hopefully we're going to delve into some of the deeper topics that are affecting the Bitcoin space now. We're going to keep things quite free. Hopefully there'll be some arguing and strong disagreement and all of that kind of thing. Just picking up on your presentation just now, you spoke about how PayPal in the beginning, the founders had this dream of doing a lot of what Bitcoin claims to do, and that dream has since died away. So when you were talking to them, when you were working together on this collaboration, did that kind of discussion come up? Was there a shared ideology, a shared vision between Coinbase and PayPal?
Not really, and the reason is that the founders of PayPal, who have long since left the company, had I think a very different vision than the people who run it today. So it got acquired by eBay, where they viewed it only as like a payment processor for their auctions, and it turned out I think PayPal is going to be a much bigger business than eBay ever was. The founders of PayPal have all moved on kind of to other things, and they were the ones with the kind of core ideals at the early stages.
And I mean, were you knocking on that door for months and months and months, or did they come to you, or how did that sort of relationship begin?
I believe it went through the Braintree integration first, because PayPal owns Braintree. So once that deal progressed, we started having conversations with PayPal after that.
And you mentioned about moving from, say, the mature economies to the emerging world, emergent economies. If you could click your finger and be in one sort of third world country now, what would that be? Where's the real opportunity for Bitcoin in the developing world?
I have one thought on that, which is I'd probably go Philippines or Indonesia. The reason why is that we actually made a list in our office one time. So when somebody pulled some data on this, you can get a list of cell phone adoption per country and bank account adoption per country. And we made a sorted list of the highest the highest cell phone adoption over the lowest bank account adoption. And that list looks like Philippines, Indonesia, China, and then a bunch of places in Africa. So there's people in Indonesia who have like 2 cell phones per capita somehow, but like 10% of people have a bank account. It's shocking. So anyway, if I could pick like one kind of developing country to go to, I think it'd be that. So their first bank account, quote unquote, would be on their mobile phone.
And just finally, before I open things up, you included Uber on about 3 of those slides. Is that something that is that a relationship that Coinbase is working on?
So that was an example because of the Braintree integration we did. They're one of the customers of Braintree, but that hasn't gone live yet. Obviously, we'd love to work with them, but I can't promise that'll happen. So, yeah.
Okay, let's get to the meaty stuff. So you got up and said that Coinbase is the most popular wallet, and clearly in the UK, another company claims to be the most popular wallet. So why is blockchain wrong, and why is Coinbase right?
So first of all, I'll just say blockchain is an awesome company. I like those guys a lot. I think they're actually really providing an awesome product in the market. It's different than ours, but I'm really glad both of them exist. So I'll say that first. The reason why we say we have #1 market share is that we're basing that off of actual user survey data, asking them which wallet they use on a day-to-day basis. On blockchain, 1 user equals 1 wallet, and a lot of people have multiple wallets. So if, let's say, you want to have one on your mobile phone, one that kind of is like deeper cold storage, a lot of people have like 3 or more blockchain wallets, and they're counting each of those. On Coinbase, each user can have multiple wallets. So we're counting users, they're counting wallets, I guess is one answer. The second part of it is that a user on Coinbase is a bit different. There's usually you've done identity verification, you've linked a bank account. A user on blockchain is a bit more anonymous. Like I said, I'm glad both options exist, but a lot of people treat them like throwaway wallets. So anyway, or temporary or something like that. Not to say it's a lower value to it. So anyway, that's a summary of it. When you ask actual people like on Reddit, Bitcoin Talk, etc., we come out as highest market share, but it's not by a big margin. I think they have 18%, we have 24%. So, yeah.
Yeah, and I mean, just in terms of regulatory environment, you have to know exactly how many customers you have.
Certainly doesn't hurt, yeah. Yeah, the number of users is what they care about, not the number of wallets.
And Eitan, in the UK, that same kind of onus doesn't necessarily exist, or does it? In terms of knowing exactly, blockchain does not need to know exactly how many specific users it has. You can open up an account and not have to deal with that.
That's right, because the regulatory situation we have here, which is in some ways people might love it because there's very little regulation. Some people would disagree and say that causes a problem for the ecosystem and for people generally. But yeah, blockchain aren't under the same sort of pressure that Coinbase will be under to know exactly what everyone is doing, and that's not really what they're going for. So the answer to that would be no. Yeah.
And is that ever coming? Is that you work in this space, you advise Bitcoin companies. Are you advising them that, hey, regulation is right around the corner, you need to start getting in shape?
I do tell people to be prepared for it. In the UK, even AML is not really a regulation which says you have to have AML. So I would always tell a business to make sure you're doing that anyway. You don't want to find yourself in a situation where a regulation comes in and then effectively you have to stop trading while you get everyone's details in. So in some cases, it's sensible from a sort of future-proofing point of view. Personally, I think that regulation isn't necessarily a bad thing. Some would disagree. So it may be from a practical point of view because it could be hard to become compliant, or it might be ideological. But I personally think that if it's going to succeed, it needs to be mature and adult. And I think there's a lot of mistakes that have been made in the existing financial system, and we can just fast forward through those mistakes and not have that. It's a shame when you see bad things happen to normal people because they've trusted a particular business. It hasn't been run in a good way, and a small amount of regulation would have stopped a lot of these things. So if it's proportionate, then personally I'm in favor of it. Is it coming soon? The European Banking Authority has said as a short-term goal it should always be, there should be AML, and at a later stage, pan-European regulation, a bespoke regulation, but that is a long way away.
Paul, you're looking itchy over there when the topic of regulation came up. Is it about time that regulators clamped down and stopped all this funny business?
Well, I'm in a bit of a strange position because Vendorcom is an organization that brings together all the key players in the traditional payments industry, but I'm incredibly pro Bitcoin and cryptocurrencies in general. So I kind of sit with, one foot in Bitcoin and one foot in the mainstream payments industry. But I see lots of innovations that have come through in the mainstream payments industry over the last 5 or 6 years. And I think the Bitcoin world can learn a lot from those. And I see some stuff going on that's going to affect, from a regulatory position, affect the mainstream payments industry. And again, I think there's lots of lessons there. Where in the UK particularly, we're going to see the payment systems regulator fully formed by April next year. And I think whilst they've got a lot of focus on the mainstream interbank scheme world, they will be big time focusing in on subversive activities in the Bitcoin world.
Tell us one thing that Bitcoin companies could learn, say, from the traditional payments processor. What could Brian here learn that that Coinbase isn't doing already?
Oh, we've already used the term wallets tonight. Like the way the mainstream payments industry bandies around the word wallet, it's just ridiculous. And we end up, I think we actually need to think of what do we use our wallets? Let's use real language. What do we use our wallets for? Our wallets are there to aggregate lots of different payment mechanisms and identity mechanisms. I've got my money, my cash. I've got my credit cards, I've got my driving license, I've got probably a few business cards in there. And it's got to be, let's use the language that the everyday man in the street can understand. But to have this one, as we see for many of the mainstream card organizations, you've got one wallet per every product that they're trying to put out. It's just crazy. So just talking real language is going to be what gets mainstream adoption and merchant and consumer adoption.
That's exactly, Coinbase's whole mission has been, we're going to demystify this, we're going to make this simple, we're going to make this easy to understand. Has there been have you lost anything in that process, or is there something not about Bitcoin that's not being communicated when you simplify it down?
I do worry about that sometimes. It's a really hard balance. You need to make it really easy for the first person, their first experience with Bitcoin to get going. So for example, really simple stuff. We let people pay to an email address instead of a Bitcoin address. In fact, we even go out of our way to like put people's Bitcoin addresses are kind of one level beneath the default views in Coinbase. You might have noticed that. It's a deliberate choice because we know that we want to make them available, but they're not like the first thing people should see and wonder what they are. Or like, I remember I saw somebody see a Bitcoin address for the first time and they said, "That's a password. Like, can I share it with other people? Do I have to memorize it?" So it's a little bit confusing. But yeah, I think I do worry about that sometimes that we're hiding like a little too much of it from people. So there's a great metaphor in user interface design that's kind of like a Swiss Army knife. So a Swiss Army knife can do a ton of things, and if you opened all the functionality, it would look like that. It looks intimidating and scary. But they don't do that. They just expose like a thumbnail catch. So if you really want to pull out a certain tool, you can have it there. So we kind of use that metaphor sometimes in our UI, and we say like, all right, let's put a thumbnail catch there, but it's just that it's not like full, raw transaction hashes or whatever. I don't know if that's helpful, but.
I mean, the thing that we're sort of skirting around with regards to wallets is why anyone should trust a Bitcoin company to keep their money safe. That's been the sort of the big public relations disaster for Bitcoin over the last year. What is the compelling answer to that? When someone says to Coinbase, "Why should I trust you any more than I trust my bank," which also gets hacked?
I think that's like probably you've hit the nail on the head. Like that is the key kind of question happening in Bitcoin right now about these different philosophies. So I'll give you two answers to that question. One is about why I think you can trust us, but the second is about why we've shifted our opinion on that a little bit. And this is why we're coming out with like multi-sig vaults that the user controls their keys. This was something we debated a lot internally, but I felt pretty strongly about it that we should provide that option. And what I think the ecosystem will eventually move to is a model where, let's say you have your $1 million of Bitcoin or your 1,000 Bitcoin or whatever, and you actually should probably keep that in a vault that is where you control the keys if you know how to do that and you want to. Your day-to-day spending wallet, where you keep your $100 or your $1,000 or whatever pounds, maybe that is a much more seamless way to pay, and so you could actually have like a Coinbase controlled wallet for that. Literally, it is a wallet in the sense you shouldn't store your life savings in a wallet and carry it around the street with you every day. So I think that's kind of the way that we're moving into that territory. We want to kind of capture the best of both worlds. I can tell you all about why we think you should trust us for even the wallet piece. 98% of funds offline. We've created kind of the first most popular cold storage system. We get independent third-party audits done. We hold insurance on the funds that are stored live on the server. Cybercrime policy, it covers employee theft, accidental loss, hacking. So these are all examples of why I think you can trust us to a certain degree, but we want to make that option available to anybody who wants to have full control of their money. So yeah, I feel like a little bad we didn't offer that earlier, to be honest, so we're fixing that.
And I think that's where the boundary in terms of where regulation and where absolute innovation and creativity should be happening. We're fairly careful of our wallets in our back pockets, or we look after our cash, we look after our credit cards, but only to a certain degree. And so the core funding is what does need to be regulated if we're going to build confidence in the wider merchant and consumer sphere. But yeah, create lots of easy ways of getting that money into a sellable, particularly if we're talking about what's going on in the merchant world. Create some traction, create some motion in that world. At the moment, it's all locked way back. One or two people, everybody here will have their everyday Bitcoin wallet, but for 99.5% of the population, they don't even know how to begin to do that trading environment. And once we start getting that into mainstream parlance, that'll make it a lot easier.
I mean, you represent the competitors to some extent to Bitcoin as a payments network. And what is the discussion? Are they saying, "Hey, nobody uses this. Why should we care"? Is that what's going on?
Well, there are a whole load of arguments at the moment. There's from the absolute denial, this is just about drug trafficking and everything bad that used to be part of the Bitcoin world. And they haven't caught up with where Bitcoin is today. And so there's a big marketing campaign to be done to say, actually, this has really quite fundamentally moved on. And if that's the message that we can get out there, both as the Bitcoin world and as the mainstream payments world, that will be, first off, a big achievement. But I also think there are a lot of main players would like to get into Bitcoin, but the regulators are taking such a belt and braces approach to this that they're just stifling what could be a really, really strong avenue to transform the cost, the security, the cross-border frameworks that we're actually just constrained by in mainstream payments now. And I look at what's going on in the regulatory area. Like you look at what New York State put out in terms of the bit license. That looks like they're trying to put PCI on Bitcoin. Like I can understand why PCI and the payment card industry data security standards needs to be put in place for mainstream card payments, because the periphery is just so porous, and it's just we're using systems that have never been designed for this. But we can put basic core security into the Bitcoin world, and this sort of system where the most widespread extremities of the merchant world, anybody accepting Bitcoin, needs to be licensed. That's just unreal. That's like some of the mainstream payment industry is trying to talk to independent stores and say, you need to be PCI compliant. These guys have not a clue about what that means. And if we're now saying this is what's going to need to happen, where somebody's taking a Bitcoin payment in normal transactions, it's ludicrous.
I mean, in fairness to Ben Losky, who I imagine has many fans in this room, he has sort of rode back his proposals to a certain extent. I mean, So, Eitan, are they still the kind of demonic, controlling regulation that will kill Bitcoin that people thought they were, or is it actually quite benign now?
I don't think it's benign. I do think it's going to change things. It's now less likely to apply to software developers. For me, there were two things which I was particularly uncomfortable about. One is the application of anyone building anything. Application was also anyone building anything for a Bitcoin business, essentially. So if you're responsible for building the wallet, even if you're not the operator of the wallet, let's say, or the wallet business, then you'll be caught. And then also there's this extraterritorial effect. That's something which is closer to my heart because we aren't in the US. And I'd like to see a lot more certainty around what does it actually mean to be involved with New York, because we're all kind of involved with everywhere else in some way. And where do you draw that line? It's a kind of a spectrum of connections with places. Is your business established there? Is your target market there? Or are you using a server that happens to have, you could be using a cloud server that happens to have a base in New York, and what does that mean? So I guess we'll see when it all finally is, the full draft is released, but I was very glad to hear what he had to say earlier this week or last week.
Yeah, I think the fact that it's been positioned that it's a proposal, but everybody in this room needs to find some way to comment on that. So get online. If you haven't already, read the 37 or 38 pages. Try and understand what that detail of that is going to mean in the real world. I actually think that it's fine to say, oh, this doesn't affect software developers, but software developers don't exist just to develop software in an esoteric bubble. It's going to be applied in the market. If the market gets stifled, then there isn't a market for your software, no matter how wonderful it is. So understand the ecosystem here that is going to be, I think, killed off at the front end, and that's very, very dangerous. I actually think this is very, very similar to what was going on in the 1760s when George III decided to tax US trade. This is really, really fundamental at that sort of level. And when you look at what happened in the stamp tax, this is directly analogous to what's going on there. And I think we're not going to see the American War of Independence this time, but perhaps we'd be looking at what is going on in the cryptocurrency independence area. And I think we need to understand those bigger macro dynamics that are going on here.
Brian, Coinbase is seen as one of the more sort of regulatory-friendly Bitcoin businesses. You've talked a lot in the past about the need for certain types of Bitcoin businesses to be regulated, to work in a sort of a known space, a known regulatory environment. But I'm hearing now that it's like the American War of Independence if this thing goes down. So is the bit license something that you want? Is it what you've been calling for?
Not really. I mean, I think you were commenting on BitLicense specifically, and I'm talking about generally working. We want to work in the existing regulatory framework and get deals done with banks so people have easy ways to buy and sell Bitcoin. So that's our primary goal. I think, just to get at the heart of your question, so yeah, I mean, our plan is we have a foot in both worlds, right? We want to get these bank deals done so it's really easy for people to buy and sell Bitcoin, but we have to comply with regulation to do that. Now, I don't think, Ben Losky's proposed BitLicense is going to be the eventual form that it takes. Even if it does, it's just in one state. I don't really know what's going to happen with that, but I feel confident there's a way that we're going to be able to accomplish our goals without having to. Some of the things he was suggesting aren't actually even possible in the Bitcoin protocol, so that kind of gives me some confidence. So yeah, I don't know exactly how that's going to play out, but I don't think the two are necessarily in conflict with each other.
But that question of why people should trust Bitcoin, the reason why a lot of people trust the money in their bank account to still be there tomorrow is that even up to £30,000, I think, if the money disappears, if the bank disappears tomorrow, the government will still give them their money back. Ultimately, people don't have that guarantee in Bitcoin. As much as Coinbase can say our systems are secure, we've got your money safe, if Coinbase was to disappear tomorrow, I wouldn't get my money back. Is that like an inherent problem that Bitcoin's going to have with trust, and that your company's going to have with trust?
Well, I'll go back to the answer I gave previously, which is I think client-side encryption with multi-sig vaults is a great solution to that. Another one that we've done is insurance, right? We were the first company in the space to have an insurance policy through Lloyd's of London on the funds we store live on the site. So if we did disappear, going insolvent from that, would you get your money back? Well, there would certainly be a claims process with an insurer. It might take a year, it might take a month. I don't know. So that's probably not as reassuring to people. I think client-side encryption is probably the stronger answer to that.
If we move on a little bit to, reimagining the payment systems, reimagining the banking system, what should, Coinbase be trying to replicate? And, looking at your slides in terms of payment systems, you're trying to replicate a lot of it. And what things do you really not want to replicate? What kind of things are you trying to get away from?
So I think the things we want to replicate are ease of use. It's still pretty easy for people to take out a credit card and swipe it. It kind of just feels natural. They understand it. It obviously wasn't always like that. Once upon a time, credit cards was this crazy new technology, right? So we want to replicate the ease of use and kind of the ubiquity of it in terms of how many countries it's in, how easy it is to get access to it, those sort of things, and actually even improve on that. The part that we don't want to replicate, I think, is that financial services have this kind of really antagonistic relationship with their customers where they sort of just don't treat them with respect. They're sort of sometimes guilty until proven innocent instead of the other way around. I think if you ask a lot of people what their relationship is with their financial service providers, it feels a little bit hostile. Like there's a lot of fine print, hidden fees. Sometimes I don't feel in control of my own money. Those are the things that I think Bitcoin has the potential to leave behind and kind of restore this sense of control and freedom that is really empowering about Bitcoin.
If I go onto the subreddit for Bitcoin, you'll find some people who feel that way about your company.
Yeah, absolutely.
So what have we created that's new? There are people who are pissed off about Coinbase not letting them gamble, for example.
Yeah, so it's right. We struggle with this every day, to be honest with you. It comes back to this idea that we have to follow laws. I think there actually is a much better way to follow all the laws and still treat your customers with respect. And do we always get it right? No. It's actually really frustrating to me personally. It's sometimes something happens in the company where we have 65 people now. I can't possibly know everything that's going on. And something does happen sometimes where I feel like we really let our customers down, and like that's like a terrible feeling as a founder, right? So we do our best to correct it, apologize when we mess up. But ultimately, I guess like the real power of Bitcoin is that it holds us to a high standard, because if we do lose our customers' trust, they have options. We don't control the Bitcoin network like in the way that PayPal controls the PayPal network. Like if you want to move your PayPal balance somewhere else, you can't. There's only one company that can use the PayPal network. But there's hundreds of companies or more that can use the Bitcoin network. And that, I think, is like the greatest, it's almost like a deterrent against us. Like if we drop the ball, or we go evil, or we start to put ads everywhere on the site, or whatever we do, we know that people can just move their Bitcoin to another wallet. And it has, like, the exit is like the ultimate power the consumer holds over the merchant, or the service provider in this case. So I think that will solve it in the long run, and it's our job to like get it right so you guys continue to trust us.
Yeah, I think that's a really good example, because it becomes not quite self-regulating, but it certainly regulates the where you feel, how you feel you're going to perform, the ethical standards, and so on. And this is where I think that the Bitcoin world is really transforming itself. But when you've got really legitimate players coming through, trying to do the right thing, pushing back against regulation when it's just not required. Like one of the things I'd say about the existing infrastructure is to try and maintain the sort of level of ubiquity that the existing infrastructure's got. The international capability is really strong. Visa and MasterCard have put a lot of money into that. Like we're starting to see that break down a little bit. We've got campaigns in Europe to try and bring more cross-border capability. But Bitcoin really does offer that. Trying to stay away from the peripheral security issues, getting to a situation where the core technology has meant we have to put sticking plasters around the outside of the existing cards and payments industry is really, really damaging. Like 10 years ago exactly, we were rolling out chip and pin. That meant every single point of sale system needed to be changed. That's just not the sort of thing that the merchant world is ever going to do again. So we need to be bringing them something that can just fit in seamlessly into the merchant world. And actually, it needs to fit seamlessly into the consumer world as well. In the past, when you were talking about card payments being very, very new, it was. But the speed that we were trying to bring new initiatives into the payments industry was relatively slow. So it came through on a pretty much generational basis. So your parents used credit cards. You use credit cards. When we moved from the gold standard, when you go back to the 1700s, and we were transforming, we had coins in our pockets, but a £5 note issued by the Bank of England, that was pretty serious stuff back then. And now I think if we're trying to get adoption in a 3, 4, 5 year period, then we need to look at how we communicate in a much, much clearer way to the people we want to see use this.
Liam, I mean, you're from that space. What we created the Bitcoin community has created is, Zappo has a debit card. In the remittances market, you have another organization at the other end converting your money, charging you a fee, and you have payments processors who are for merchants. A lot of that, to me, looks like the system that already exists. So what's actually, you know both systems. What's actually new there?
Well, that's one of the frustrations I have to a certain extent, in that the Bitcoin world exists in the Bitcoin world, and the payments world exists in the payment world, and there's really only a very, very small convergence, and I think we need to see that come a lot closer, because I think the mainstream payments world has got millions of merchants. It's got tens of millions, billions of customers, and so I think if we're going to get traction fast in the Bitcoin world, then we need to build those relationships. And it's pretty idealistic, but 10 years ago when I set up VendorCom, the payments industry wasn't really talking to each other. We were trying to roll out chip and pin in the UK, and we had card schemes, and we had banks, and we had systems vendors, and we had merchants, and nobody was really speaking to each other, even though we were trying to roll out a global industry standard that really made some good, compelling reason why we needed to move forward. So, yeah, it was pretty idealistic to try and bring competing organizations together then, but I think you could look at the Bitcoin world and the payments world as competing, but I actually think there's way, way more in common if we're really going to make a success of this.
I personally, I quite like it when you see someone, for example, Zappo, take Bitcoin and then kind of dumb it down a bit or add in they add in a card, right? A card to me is less evolved. But it is also what people are used to, and I think you need to push adoption in those baby steps. So there is always this idea of trust and familiarity. In other parts of the world, they're much more familiar with the idea of paying with things with your phone. I could see people who use M-Pesa probably be more likely to use Bitcoin because it's more familiar, that their society is more advanced in that sense, and that they know your phone can be your wallet. I think Apple Pay ultimately is good for Bitcoin just because it makes people realize that their phone can be their wallet. Like I'm using my using Oyster Card, using contactless. You have this idea that your money can be digitized. So going back to your original question, to replicate some of the existing things, I think it can be very worthwhile if it makes the adoption less scary and less of a step away from what's familiar.
I think if we draw the parallels to what people are used to, that will make it really, really straightforward. Demonstrate what's the cash bit, what's the core infrastructure bit. People are used to that. But it's one of my biggest frustrations with the regulator, because if we're going to see Bitcoin confidence build, then the regulator needs to lighten up a bit. And the way I would be bringing that into the market would be to say to these organizations who have, so mainstream banks, if you look at the main core clearing banks, they should be able to play in the Bitcoin space with loads of conditions attached. But those are the guys that are used to dealing with regulators. They're the guys with all of the risk and compliance engines that should be brought to bear. So I'd say create a sandbox. Yeah, no way can they jeopardize core consumer banking funds, investment funds. But in this sandbox, go play in Bitcoin, make it real, but at the same time, you must bring core skills from your mainstream business into the Bitcoin sandbox to play with. Because if that can happen, then we can bring all of the learnings from those organizations into this. Because regulation is required in order to give confidence. When something new happens in the payments industry, merchants and consumers just ignore it until they feel that they can be really confident with it. The other thing I think, a little bit like the aircraft manufacturing businesses, any banks that are playing in the Bitcoin space, when we find that something goes wrong, which inevitably it will do, that intelligence will need to be shared even with your competition. Because if we're going to get the ground big time, then we need to bring those skill sets in very quickly.
Yeah, I mean, you said you're in the middle of discussions with a bank in Britain, which would be the first Bitcoin business to have if you get it, to have an operating relationship, probably before a UK company, which would be funny.
Did I say that? I don't think I said that.
You said you're currently...
We're reaching out to lots of people.
And are you having the door shut in your face repeatedly?
Yes, constantly. But anyway, sorry, the basis of your question was...
No, so he's saying they're not going to do anything until it's regulated. Is that what they're saying to you?
I'm speaking generally here, not about the UK. That's not what they're saying. Like I said earlier, I think it takes a while for regulators to put pen to paper and actually write something into law. But a lot of our conversations with them, we try to get a sense of, first we want to be an educational resource, build a relationship with them, show we're competent. Then what we do is we say, we believe we'd like to launch in this market on this date, and here's why we believe, it should be a green light. How do you feel about that? And sometimes they say we agree. Sometimes they say we have more questions. Sometimes they say no way. So it doesn't mean that it has to be written into law yet. I think if you wait for that, it's going to be too long. We just want to have an open dialogue and feel fairly confident we're not going to get an enforcement action or something like that.
I mean, I can go onto Circle.com and use their product right now. So what is taking Coinbase so long?
Use it where? In saying
I signed up for an account on Circle, and
Yeah.
it worked, and I can send money to it, and I can use it. And I live in the UK.
yeah, you can do that on Coinbase too.
Okay.
Yeah,
You can sign up for a wallet for Coinbase in almost any country in the world. You can even move GBP into the Euro account and do that if you want. It's not the easiest experience that we want, but it's in terms of just creating a Bitcoin wallet that we support that in about 190 countries today. I was specifically saying, when we say launched a country, we mean we have an easy way to get your local currency into and out of the ecosystems, and merchant tools are enabled. That's I should have made that more clear, but that's what we mean by launched.
Yeah, I sold my Royal Mail shares today and opened a Coinbase wallet. Fairly straightforward. In fact, when you look at the volatility of Royal Mail shares over the last year, it's not too far different from Bitcoin.
Yeah.
Nice.
I can feel the eyes of contempt just burning into the side of my head. Just to finish up, because we're coming to the end of it, and we can have some more questions from the audience. Now Coinbase, you have a number of merchant relationships. You have a number of payment processor relationships. The capacity is really there for a consumer to buy a lot of stuff, to use Bitcoin easily. But we're yet to see, the explosion in user growth. What's missing?
I'm not sure I agree with the premise of the question, because we've seen 10x user growth in the last year. It depends what your definition is of user. Let me ask you this: why do you think user growth is not exploding?
We're talking about. It doesn't. I don't know. Maybe people could disagree, but it doesn't feel like Bitcoin has entered the mainstream in terms of usage.
Oh, okay. Yeah. Well, I guess you have to ask compared to what, right? I feel like Coinbase has only been around 2 years. When I started 2 years ago, most people didn't know what I was talking about, or thought it was a scam or something. Now it's very hard for me to find somebody in San Francisco, but even almost anywhere I go, that hasn't at least heard about Bitcoin. It's actually pretty rare that someone hasn't at least heard about it. So that's a dramatic change in just 2 years. Now, do all those people have Bitcoin? No. Do all of them spend Bitcoin who have it? No. But it's I feel like a lot of, my job at Coinbase, just day to day, and for the company, is we're just moving the ball forward 1 yard every day. Like we know where we want to be in a year, but if you think about that, or 2 years or 10, but if you think about that, it just seems unattainable. So what can I do today to help it move forward? All right, let me go to the meeting with Overstock.com for the 6th time or whatever, and see if we can get this damn thing to launch. Like that's what my day is day to day. So I try not to pick my head up and look around too far out, because it can seem like you either went super far or you're not far enough. Like we just 1 yard every day, and I think we'll wake up in 5 years and be there. So
Yeah, I think we're a bit too urgent about what's necessary. And okay, a lot of the funders will go, yeah, we want some return right now. But again, it comes back to this: what are the timescales of other payment systems adoption and rollout? It's been generations, and okay, this will roll out faster than that, but we just need to relax a little bit and go, yeah, this will come. And I think if we build that's actually where some of the confidence comes from, that we're not urgently trying to take it mainstream. I actually criticize a lot of the mainstream payments industry about talking about some mobile payments being mainstream. I actually don't think, I'd almost go as far as to say nothing will be mainstream in payments in the same way as we saw with cash or cards or checks in the past. We're going to see massive divergence and diversity, particularly in that merchant to consumer. What do they use? Do they use Bitcoin? Do they use cash? Do they use checks? Do they use cards? Do they use direct-to-bank account style payments? It's all going to be part of the mix, and what we need to do is create really, really good interfaces for different consumers to use in different scenarios, whether that's online or on mobile or in store, or the TV, and any of those sort of options.
Cool. Well, thank you so much, Paul. Thank you so much, Brian. Thank you, Eitan. Sorry. Do we have some time for questions? Okay, so questions, anyone? Right here at the front, start.
I was reading a blog article earlier today about Coinbase microtransactions, and you can send a payment from one account to another without incurring a fee. Does that work from outside? Like if I had a blockchain wallet, could I send a payment, a microtransaction to Coinbase without a fee incurred?
So the question is whether you can send a microtransaction to a Coinbase wallet even from outside without incurring a fee.
So the answer is if you want to pay the miner fee, yes. But the reason why we launched off-blockchain microtransactions, they are off-blockchain, which means they're in-network, is that you can do it without any fees, Coinbase to Coinbase. Our default, obviously, is we want to put everything on the blockchain that we can, and we pay miner fees on behalf of our customers, so they don't have to worry about that. But there are certain features that people want and that aren't cost-effective to put on the blockchain, like free microtransactions, like for 1 Satoshi or tiny amounts. So in those cases, we build it off blockchain. That's the trade-off.
Will it ever become a feature in the future on Bitcoin itself to be able to do microtransactions?
So yeah, the question is, will it ever become possible in the future on the blockchain? I've seen one proposal for it that's really clever. I think it's a BIP, one of the BIP proposals. It does require you to like pre-fund a certain amount on blockchain, and then you kind of piecemeal it back, microtransactions, which to me I don't think is going to be working for everyone. So I guess short answer is I haven't seen a good proposal to do it, but someone might come up with a clever way.
Any other questions? No? Oh, yes, over here.
How worried are you about really restrictive legislation, country by country or EU-wide?
How worried are you about really restrictive legislation, either country by country or EU-wide, did you say? Or throughout the whole of Europe?
Is this who's the question for?
Actually, let's start with Eitan.
It does worry me that there could be a lack of understanding on the part of the regulator, which would mean that they over-regulate. I think that the idea of a payment being made, there are risks associated with that. That's understood and has been for a long time. There are things you can do with a Bitcoin transaction, like multi-sig, which would hopefully take away some of that. So I would like to see, I'd like to see regulation really, really properly understanding it and understanding what the technical capabilities are and how that can make a transaction safer without necessarily having to regulate it. So a technical standard rather than a regulatory standard. Imminently, I don't see that in the EU, it will be years before there'll be any pan-European directive. It would take years just to agree on what the wording of it would be, and then years to implement it. So 5 years, maybe. In the UK, I think we're going to see some regulation around AML, and I think we'll see that across Europe. That's understandable. It's inevitable in my book. There is a money laundering risk, and I don't think that people generally. I think people can see where they're coming from. The proposals to effectively decentralize currencies so that you can then nail the guy at the top of the pyramid, to me just seems like it's a complete misunderstanding of what it is we're doing here. So I think that I don't think there will be, in the short term at least, any major regulation at a pan-European level. And I expect in some member states we'll see short-term measures dealing with AML.
Any other questions?
Yeah, I got one.
Yep.
To what extent will the increasing acceptance of Bitcoin depend on the emergence of a regulatory environment like you were referring to? How well can it function in the absence of that?
The question is, to what extent will the movement of Bitcoin into the mainstream rely on a regulatory environment, and can it survive without one?
I think we need to build that confidence into the system, and I think regulation does go a long way to provide that. It's like you were saying earlier, that there's a safety net on bank accounts, so that if the bank goes belly up, then the funds are there. There's a safety net on credit card transactions, and so that underpinning is really quite important. Whether that needs to come from a regulatory point of view, I'm not sure. What Brian has said about insurance, it goes some way, but I think we need to make sure that confidence is there. I look at it in terms of when chip and pin was being rolled out in the UK. The payments industry couldn't persuade the government that they had a secure system. Fraud levels were in the hundreds of millions of pounds. And it was only when we got consistency and that was an global industry-based approach. So either the Bitcoin world needs to come together to say, this is how we're going to do this, and this is the underpinning principles in the same way as the credit cards either have or have been forced to do. And I think there perhaps could be a little bit more of a collaborative approach between the key Bitcoin players to say, where is the infrastructure here? Not just around where's the technical infrastructure around the blockchain, but where's the business infrastructure? Because the regulator will have that in their sights if the industry doesn't come together to do it. But I absolutely agree with you that partly self-regulating, but I think if the Bitcoin world can at least piggyback on some of the existing regulatory areas, whether it's KYC or AML requirements, that will start to build confidence in its own right. But if we're going to get out to the mainstream consumer, they're just going to say, how does this protect the payments that I'm making? And it will vary by country. In the UK, we're still very, very familiar with using our credit cards to buy certain products because it's giving us protection, whether that's holidays or whatever. A lot of the rest of Europe really don't care much about that, although they've got different laws that create those protections. So there will have to be a safety net if the mainstream merchant and consumer world is going to have confidence.
I think a lot of the point of the regulation is preventative. From a user point of view, I'm sure things like Mt. Gox are a terrible, terrible turn-off. And that was an example of something where a bit of regulation might have prevented that. If there was a fit of proper persons test on Mark Capellas, would he have been told he can continue to run this business in this way? Probably not. And then maybe it would have been averted. Who knows? But from a user adoption point of view, I don't think necessarily the user is going to think, well, I know this obscure regulation applies, so I'm all right. They might care about insurance, but really it's about the whole industry having a good success rate, it looking credible, and things like hacks or bad actors or wacky individuals who are completely out of their depth just don't help, because sooner or later they get exposed and then everyone hurts.
We have time for one more question. I believe this chap had a question, but he's on his phone now. Did you have a question?
Yes, I did, yeah. Two more.
Go for it.
So I represent BitPesa in Europe and the UK. What would Coinbase be looking to do within Africa at large? And also how can the Bitcoin community support the remittance businesses that are trying to grow and develop?
So this chap is from BitPesa, and he wants to know what is Coinbase planning to do in Africa, and what can the Bitcoin community as a whole do to support remittances businesses?
Yeah, first of all, thanks for building an awesome product. We tell people about BitPesa actually a lot when they ask us what are people actually doing in Bitcoin today that's innovative. I drop it as an example a lot. We want to move to as many markets as we can, and there's a lot of interesting stuff that can happen in Africa, especially countries like Zimbabwe that have been, had the worst hyperinflation and things like that. To be honest, it's something I need to learn more about. I've never, I don't have any experience with entering that market. I'm sort of learning a lot of things on the fly here as I go, to be honest with you. We have good advisors and things like that, but maybe you and I should talk. You probably know more about it than I do. I should be asking you that question. How do we enter Africa? I'll ask you after this.
And the final question here. What other uses do you see for blockchain technology, and how is this going to affect people's day-to-day lives? I think we'll let you answer the last question.
Sure. Well, we've seen a few exciting ideas. So there's people issuing shares of their company on the blockchain. I think there might have been one example of that so far. There's people doing, there's like a lot of machine-to-machine payments. I don't know if that falls within your question. These are all kind of futuristic ideas, like self-driving cars on the freeway, and if one wants to pass the other one, they can negotiate a microtransaction. He pulls over to the right lane so you get to work faster. There's time-stamping stuff on the blockchain, so you can say, here's the text of this contract and our signatures. Let's hash it, put it in the blockchain. Then anybody can see that, yeah, we did in fact sign this on this date. There's anything about transferring assets, I suppose. It could be like title to property or land or like a car. Anything that would kind of eliminate a lot of the legal fees and overhead that comes from transferring and proving ownership of something. That could be interesting. Yeah, those are the ones that I keep hearing about that seem cool. There's probably people here in the audience who know a lot more. So,
I think any registry, you can, a company's house, land registry, the DVLA, any registry where there's someone in charge of maintaining that. In war zones where one country is trying to take over the other country, the first thing they do is bomb the land registry, so they can ship all the refugees out and claim ownership. And if that was decentralized, it'd be a great solution to that problem, more efficient. Don't see why they don't do it now.
Perhaps if we're going to have a situation like we had today with the real-time Bank of England real-time settlement system going down, then the blockchain could have stepped in there quite nicely.
Great. Well, thank you, Paul. Thank you, Brian. Thank you, Eitan. Thank you all for coming and asking questions. That's all.
Thank you very much, guys. And thank you, Kadhim, for asking the questions as well. Thank you all. Big thanks to Coinbase because they've sponsored this evening as well. And thank you to Brian for choosing us to come and present tonight.